Hello dear students, welcome back. Today we are going to do question number 18. Jenny and Anya are the partners sharing profit and loss in the ratio of 3:2. And here balance sheet of the firm is given. Further, it is given that they admitted Priyanka as a partner on 1st April 2016 on the following terms. Here some conditions are given and we have to prepare necessary accounts and balance sheet. So here is the answer. Here we will prepare revaluation account, partners capital account, bank account, and balance sheet as on 1st April 2016 after admission. So let's start with the first condition. Here first point is given, Priyanka will bring rupees 14,000 as goodwill in cash. So we will record it on debit side of cash and bank account. Then let us calculate sacrificing ratio in order to distribute premium for goodwill to old partner. So let us see calculation for sacrificing ratio. Here old ratio is given in the question, that is 3:2. New ratio is given in the question, that is 2:2:1. It is given in third point. So by applying the formula of sacrificing ratio, we will get 1/5 as Jenny's sacrifice and Anya is sacrificing nothing. Here her sacrifice is nil. So here premium for goodwill will be distributed to Jenny only. So here Jenny's capital account will be credited by rupees 14,000. As she is getting premium for goodwill, that is 14,000. Now in second point, it is given that Priyanka will bring her capital equal to 20% of new total capital of Jenny and Anya. For that we need to know total capital of Jenny and Anya, and that we will be only able to find it out after giving effects of all the adjustments. That is, after giving effects of the adjustments as to goodwill, reserves, if any, and revaluation account, etc. So let's move further. Fourth point is, provision for bad debt is not required. Now, as provision for bad debts is not required, that means all debtors are good. So here in our new balance sheet, now debtors will be shown at rupees 56,000. And note that bad debt reserve is a provision for future possible bad debt. So it cannot be distributed between old partners if it is not required. Now old balance of bad debt reserve will be shown on credit side of revaluation account. Now next point, machinery is to be reduced by 10%. In new balance sheet, as the value of machinery is reducing by 10%, so now we will show value of machine at rupees 15,750, which is arrived after subtracting 1,750 from 17,500, as its value is decreasing by 10%. And as value of asset is decreasing, it is a loss, so it will be recorded on debit side of revaluation account. Here to machinery account 1,750. Now next point, market value of building is rupees 70,000. Here market value of building is given 70,000, and in old balance sheet value of building is shown at rupees 42,000. That means there is an increase in the value of building, that is by 28,000. As value of building is increasing, value of asset is increasing, it is a profit for us. So we will record it on credit side of revaluation account. Here we will show 28,000. That is increase in the value of building. Then seventh point, market value of investment is rupees 68,950. In old balance sheet, investment is shown at rupees 63,000. So that means there is increase in the value of investment. So we will add it 63,000 plus 5,950. In outer column, we will show market value that is given in the question in 7th point, 68,950, which indicates that there is an increase in the value of investment by rupees 5,950. As value of asset is increasing, so we will record it on credit side of revaluation account. Here it is by investment account 5,950. Now, in the last point, it is given that total capital of the old partners, Jenny and Anya, after all adjustments, will be maintained in their relative new ratio. New ratio is given in the question, point number 3, that is 2:2:1. That means relative new ratio of Jenny and Anya is 2:2. We can also call it as 1:1. Now, before we find out total capital of the old partners, we will have to close revaluation account first. And before that, you will have to record all the items, remaining items from old balance sheet. In old balance sheet, general reserve is given and it is shown at rupees 8,400, which will be distributed to old partner in their old ratio. So here old ratio is given in the question, that is 3:2, and according to that distribution, according to that ratio, Jenny will get 5,040 and Anya will get 3,360 out of 8,400 general reserve. Then in old balance sheet, investment reserve is also given, that is 4,200. So here this time 4,200, that is the value of investment reserve, will be entirely distributed because it remained unutilized as there was no loss on investment. This time our value of investment was increasing. So the amount of investment reserve remained unutilized. So now it will be distributed to old partner in old ratio. So according to old ratio, that is 3:2, Jenny will get 2,520 and Anya will get 1,680. Now workman's profit sharing fund is given. In old balance sheet, it is a liability. So in new balance sheet also, we will show it on liability side, 31,500. Now after recording all the items or remaining items from old balance sheet, now we will close revaluation account. Here, if you close revaluation account, you will find difference on debit side of revaluation account, that is revaluation profit, which will be distributed to old partner in their old ratio. So here revaluation profit is 35,000 and it will be distributed to Jenny and Anya in old ratio, that is 3:2. So Jenny will get 21,000 and Anya will get 14,000, which will be transferred to credit side of partners capital account as this is profit. So here we will write by revaluation account profit 21,000 in Jenny's column and 14,000 in Anya's column on credit side. And now at this stage, we are able to find out Priyanka's capital, who is new partner, as in the second point in the question it is given that Priyanka will bring her capital equal to 20% of new total capital of Jenny and Anya. So in order to finding out her capital, that means Priyanka's capital, we need to find out new total capital of Jenny and Anya. So now as we have given all the effects of adjustments, now we are able to find out total adjusted capital of old partners. As I explained you earlier, total adjusted capital means total amount of capital which is arrived after giving effect of adjustments as to goodwill, reserves and revaluation account, etc. Now as we have given adjustments given effects of all the adjustments, let's total the column, Jenny's column, credit side, 70,000 plus 5,040 plus 2,520 plus 21,000 plus 14,000. Similarly, we have to total the Anya's column also. Here is the calculation. Capital of Jenny and Anya. Here, total the column, credit column of Jenny and total the credit column of Anya. So, total amount of credit column of Jenny is 1,12,560 and total amount of credit column of Anya is 75,040. So if we add this, we will get total capital of Jenny and Anya, which is 1,87,600. And it is given in the point number 2 that Priyanka will bring her capital equal to 20% of new total capital of Jenny and Anya. That means 20% of 1,87,600. That is total capital of Jenny and Anya. So 20% of 1,87,600 is 37,520. That is capital of Priyanka. And now we need to find out individual capital of Jenny and Anya, regarding which it is given in point number 8 that total capital of the old partners Jenny and Anya after all adjustments will be maintained in their relative new ratio, and their relative new ratio is 2:2, that is equal. We can also call it 1:1. So according to that, 1,87,600 multiplied by 1 by 2, we will get 93,800. So 93,800 is the capital of Jenny and 93,800 is the capital of Anya. So let's record the capital which we just found out, capital of partners. Here Jenny's capital is 93,800. Anya's capital is again 93,800 and Priyanka's capital is 37,520. And now we will show capital of each partner in balance sheet also. 93,800 is Jenny's capital, 93,800 is Anya's capital, and 37,520 is Priyanka's capital. And total of capital is 2,25,120. Now let's close partners capital account. First we will close Jenny's capital account. Here total of credit side is more, that is 1,12,560. And here difference will appear on debit side, that is 18,760. Now if you see in the question, it is given in the last point that the necessary adjustments will be made through bank. So here we will write to bank account. That means 18,760 is withdrawn by Jenny, which leads to reduction in bank balance. So its second effect will be on credit side of cash and bank account. Here on credit side we will write by Jenny's capital account 18,760. Now we will close Anya's capital account. Here total of debit side is more, that is 93,800. And here difference would appear on credit side, and that is 18,760. Similarly, Priyanka's capital account will be closed. Here also, total of debit side is more, which is 37,520. And here also difference will appear on credit side, 37,520 by bank account. That means 18,760 is brought by Anya and 37,520 is brought by Priyanka, which will increase bank balance. So we will record it on debit side of bank account. So we will record on debit side of bank account 18,760 and 37,520 to Anya's capital account, to Priyanka's capital account. And now we will close bank account. And here difference would appear on credit side, and that is closing bank balance. It is 90,720 by, this is closing bank balance, which will be recorded in new balance sheet on asset side. Here it is, bank balance 90,720. And finally, our balance sheet will be tallied with the amount 3,01,420. So here we have completed question number 18. Thank you.